Oh, that was awesome. Those of you been with me for a while knew exactly what I was saying. They were following on point. They knew exactly what was going on. I'm surprised when you didn't jump in and start narrating. uh, I don't know if I can continue now. That was just embarrassing. I know, right? All right, use take three. So for an uptrend, we want to see our swing lows, our main ones here. Okay, we want to see them all intact for an uptrend while we see prominent swing highs being blown out by price action. Now, a market structure shift is when a local swing low gets blown out, showing weakness in bullish order flow, and we'd be anticipating a pullback. So once we take out a prominent swing low like we took here, just by a couple of bucks, and that's all it takes. But because it didn't break to and through like this guy here, where it broke to and through and then fell down, or even here, this one here, broke to and through, came up to this bearish order block, and then slammed down. When we don't break to and through, we can anticipate price coming back, because once a prominent swing low is broken, even by a few bucks, and it gets rejected like this, any retracement we can anticipate being met with extreme energy. So that's your bullish trend analysis. And your bearish trend analysis is where you have your swing highs remaining intact, right? So once this prominent swing low is broken, we're looking for a retracement into our 786 and our bearish retracement. So this is a swing high. And when you have a swing high, you have three candles. And once this candle closes, this is confirmed, these three, as a swing high. Now, by itself, this means nothing. But when played in the proper market environment, like a 786 retracement or a premium, once this candle closes, we can anticipate lower prices, and we'd be aiming for our opposing swing lows. Same is to be said about a bullish retracement. Once you have a swing high broken, and in the 1 hour, there is a swing high in here, in the 4 hour as well, and I believe the daily, but we'll just use the wicks for now. And you want to see, is your retracement being respected? I don't like using these big, huge wicks. We'll just go to that one. And we'll just use it. It works. In the smaller time frames, I promise you, it's a lot cleaner and a lot nicer. But the key takeaway is, after a stop hunt, you have equal lows down there and all of your swing highs intact. Now, until the market structure shift in here, it actually leaks out into a market structure break. And once you have a break in market structure, this is your big time frames telling you price is reversing. And so you're looking for the money printer in daily time frame here, and then you're looking for it to leak out into the next, and from the shift to the break. So that 786 in the smaller time frames in the market structure shift was met and came out and took out that prominent swing high, which is our market structure shift. Then it comes out, break, and then it comes down to the 618 retracement, and there is a beautiful entry right there. When you have a sharp projection from a sensitive level like that, that's institutional sponsorship. They're the ones really pushing these markets. So now that we've got our swing lows remaining intact, we could, keep seeing higher prices. So you have a swing low here being taken out by this candle here. That's a market structure shift. Okay. And it only lasted so long, right? It didn't take this one out for a break. Not quite, it didn't break market structure. It didn't, break to and through and then dump to the downside. So you could still be anticipating higher prices. So now that I got the record on, this is a swing high right here. And a swing high is really simple, and it consists of 3 candles. Any up close or down close on any of these candles is fine, but the main thing is that you got a higher high and a lower high on either side. Now, once this candle confirms by closing, it confirms this as a swing high, and you can anticipate price running out those lows. Now, by itself, this means nothing, but played in the proper environment, you can, not bet the farm, but you can gain an edge in your swing trading. Same to be said for a swing low. These can be both up or down close candles, but the main thing is that you have a lower low with a higher low on either side, and these can be wicks or bodies. It just has to fit this structure. And once this candle here closes, you can anticipate the highs being run out, and then you're looking at other highs for targets. And that's kind of what we're doing in here. So my first target has been met. This is where I'd be taking a partial, and it's not huge, but it's the weekend, right? So we had our stop point, we had our equal lows, just like in the weekly time frame. Doesn't matter what time frame you're in. Okay, I'm telling you right now, it does not matter. This is the truth here. You've got equal lows showing quote unquote support. They were blown out. So now I'm looking for the swing break and retracement. So we've met the first criteria for the money printer, which is a stop hunt. We got that. Now we want to see a local high being blown out, a market structure shift. So we've got this high here being blown out here, and then we're looking for a retracement to our 786, and we create a swing low in the discount of this price range here. And we're, breaking up here, comes back down, tricks some more people into going short, because all the breakout traders are chasing this, and their stops are here, 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 and I'm looking above the market for equal highs. And that would be my premium targets. So this would be outside of the range that we're in. So I would call that external range liquidity. And that would be where I would close most of the position and leave my runner. So yeah, that's the bullish money printer model right there. And it might not get to here. Okay, but the key takeaway is when you trust this little market maker thumbprint right here, you don't have to be going in with just a little bit. Okay, you'll know when to turn the tune up. If you practice this and you trust it, the tune will sound good, and it'll just. And I'm not bragging. Okay, I'm just being real here. I've called this. I took this short from the 4-hour order block, the bearish order block, and I had, I posted it in the 99. Was it the 1 hour? So it was the 1 hour bearish order block right there that I took a short on. So I was short in here, and it was actually this guy here. It wasn't that first one. It was this one here. So once this candle closed below that one, after taking these equal highs here, that's a bearish order block. I got short in there. I was targeting this fair value gap in here and this 4-hour bullish order block. Utilizing my 15-minute time frame for market structure. And yeah, she worked out. So I was going somewhere with that, and then I forgot. I can't. I don't trade with that stuff, bro. I look at candles, they're either compressions or expansions. They're either inside or outside. And I used that in confluence with trend analysis. And I don't use that stuff. I don't know how to. And so I can't give you word up. Yeah. Just let me remember here. I was going somewhere with this. Oh, just yeah, that you guys aren't learning from some left side of the chart dork. That I was literally calling this out as it was happening. I shorted it and I pretend longed it right in front of you guys. I told you where we were going, where we were likely to head to, just based on the same thing that happens almost every single weekend. And this is my play, and I look for it every day in New York. No, not right now. I'm waiting for a market structure shift before I short in the 4 hour time frame. We kind of had one, but it's not convincing. We ripped right back up. So, and like too much for me to want to engage in a short. Right. So we did have a little, see how, look at this. This candle here slammed down, right? But did not take out a swing low. Okay. There's no market structure shift here at all. There is one here now, but it got rejected too hard. So I'm not, that's just a liquidity grab to me. That's all that is. It's nothing special. This is what the weekends do. So you have the levels I'm looking out for. And thank you for joining, everyone. I just wanted to give you a little trend analysis class just to get you guys, that don't understand, that don't know, the simple stuff is often overlooked and it's the most powerful in trading. I mean, I hope you guys have a great. Oh, we got some questions here. Sorry. Leading hope as well. And ask anyone having issues in holding trade till, let's say, it hits its measured move. I'm kind of struggling with this. I do take profits too early, I think. No, you don't. All I hear in my head is nobody ever broke taking profits. Yeah, there you go. I do trade play out after taking profits. Oh yeah. Robbie, I'm surprised that's you. I didn't see who wrote that until I read. You've been with me for quite a while, and you know it is it is tough, right? So I would think that it's just something to do with that's going on in your mind, right? So you're gonna have to make a conscious effort to fix that, or call yourself out on it, right? So you know part of it is because you've been conditioned to be fearful because you've most likely lost a lot of trades, and I hope I'm not calling you out or anything, but it's the real deal, right? Like you probably were trading live before you were ready. So when you see the money, and you know what, me too. Okay, I demo traded for over 2 years before I went live and I still wasn't ready. Okay, but I never had someone like me or Sam or ICT for that time. So, you know, I had to, you know, you know, walk through the swamp, so to speak. But so part of that is just mental conditioning already in the markets. Another part of it is you want the money, right? So you take profits too early and you're not leaving a runner. Okay, as long as you want. And I fall victim to this too, man. It happened to me yesterday in NASDAQ where I took profits right away and I was just like, yeah, I'm happy with that. Dude, man, NASDAQ flew 3 times further than where my take profit was. If I had just left one contract on that sucker, I would have been like, ooh, but I seen, and I did have a contract on, but I closed it way too early because it was up a lot. And I'm like, man, if it comes back against me, I'll lose all of that. Right? You're already I'm just working through it. So I'll, keep you updated as to how I deal with it, just to see if that will help you. But you just got to think, like, if you go in with so much, whatever you leave as a runner, you can't look at the profits of that. You cannot look at how much P&L you have. You want to use your whatever it is for you, your reversal. So if it's flying up, you want to wait for a reversal. So check this out. If price flies up and you're waiting for a head and shoulders pattern, okay, you don't have to get out. You don't have to get out at the exact top. Okay, and they're not always perfect, granted, but let's say that this was the money printer model where we broke this swing low here, and then we came up for a 786 retracement. This is where you're getting out, right here. So it's close to the top. But this is what I mean about letting price come against you. Okay, price is going to make a specific pattern that's going to reverse. So even if it's an inverted head and shoulder pattern, or sorry, just a head and shoulders pattern, then you can get out here. And so what if you didn't catch the exact top? No big deal, right? So the experience in your trades and your model will breed that confidence you need to stay in the trade. And if you're sniping bottoms like I just showed you how to here, like that was a snipe, bottom to top. And that's, I'm not trying not to brag, but I do that every single day. When you start trusting it, you don't have to put in one contract, two, or, a couple $100. You can use a lot more, but taking your profits right away is absolutely key. Absolutely. On the weekends, even I would have taken partial here and then taken partial here. And now my stop loss would be at my entry, and I'm just going to let her ride, right? Just like I showed you in my short, right? So I shorted here. As soon as I got here, I took a partial. The moment I got here, I took a partial, and then I had my limit order right there. And the spread didn't get it, so I fumbled it, but it happens. But that's the play, man. You're on par. Now you just need the confidence to trust your model, and you can use more margin or whatever you're doing. Yep, absolutely, Robbie. You will that confidence will be bred with your experience. So you're on the right path, man. You're doing really good, bro. Up or down close mean doesn't matter if they were red or green. Yes, correct. Can you show us swing highs and lows on the charts as an example? I think I did, yeah. Friend, can you go over the significance of the three white soldiers? Yeah, word. I just don't use that stuff, okay? None of that stuff is high probability to me. This is high probability to me. This is literally all I do. I don't do anything else. I don't need anything else. There is nothing on my charts ever when I'm trading. This is it right here. I just use candlesticks and swing highs and lows. That's it. That's all I need. It's so simple and it pays, and I don't need to do anything else. I don't need flags, wedges, animals, Elliots, Wyckoff, none of it. It's all can stay across the street. But I definitely don't mind teaching you guys, what I do know. I traded the lifer system for quite a while. So I think I'm quite qualified to tutor, what he uses. And I don't mind adding some stuff to my charts for you guys when you want to, use the indicators he uses, because he's got a good system. All right. You're very welcome, Robbie. Much love, man. Very informative. Much appreciated. You're very welcome. Thanks for your time and your knowledge. Right on, Jedi. You're welcome. Oh, man, I'm in trouble. Yeah, it's mental for sure. Probably from getting bit before. Word up, man. Did you say that before? Did you write that before I said anything? Because that would be trippy. Can you go over DMN's ICT toolkit settings? I just turn off the Asian range, the flout, and the central bank dealers range. I just have it for sessions and delineating time. And it's going to be useless to you if you're not on New York time. Okay, you have to be on UTC -5 New York. That's all you need. And you want your midnight vertical lines to be at midnight New York, not wherever you are if you're not in New York time zone. Yeah, you're very welcome, Robbie. Much love, man. I got greedy last night, was up 300 on high lev, didn't get out, then I got wrecked like a dork. That's okay. GF Burke, huh? What's up, bro? I'm surprised we haven't, you know, chilled out yet. If we hit this before this is over, I'm gonna laugh. So that runner, this is where I'd be killing the trade entirely. This is where I would take my profits on a Saturday. I wouldn't, and even if it mooned to 50K, I wouldn't care. Yeah, Burke, paying yourself and leaving a runner. That's just where it's at. It's hands down the best ever. I found a new strategy. I opened up an 80x BTC long the second I joined this. No reason. Well, good for you. Congratulations. I don't like I don't like running signals. It makes me extremely uncomfortable. But I just love doing TA, you know, NFA. Thanks for sharing your time with us today. You're very welcome. I love how you explain your methods in very simple terms. It definitely needs repeating though. Every time I hear you, it gets cleaner. Right on, bud. You're very welcome. Good. I must need to hear it a bit more. Already took 60%, so that's where I'm closing fully. Yeah. So this is what I do every day. This is why I look deadly, right? Is because I just do the same thing. That's it. And I do it at specific times a day and I don't change it. And if it doesn't show up, I don't trade it. If candlesticks are moving, that doesn't mean I have a trade. Okay. Period. If candlesticks don't do what I want them to do, I'm not engaging. That's it. That's how simple it is. You teach this in your Lev class? Yeah, absolutely. This is my high probability reversal pattern that I teach my students, and part of the reason why they murder these charts. Yeah, and I go over it at exhaustion, like because trading needs to get boring, guys. It needs to be absolutely boring. Okay, if you're excited, you're not thinking properly. It doesn't matter if you're mad or excited, happy. If those chemicals are being released, your logic chip in your brain's malfunctioning. You only got so much brain power. So once you become bored within your model, that's where you become profitable. Okay, take it from me. I fell victim to gravitating towards every single style. Every one of them, I've done them all of them. I guess not supply and demand, but I ain't trading oil. But yeah, I'm bored with it. It repeats. It does the same thing. It does exactly what I wanted to do. I get paid, and then I go play with Hot Wheels with my kid. It's nice. I'm aspiring to get all of my students there. Thank you. If you want to sign up, absolutely, please do. This isn't to shill anything. This is just a session for you guys. But dude, I send you a picture of my P&L demo. Yeah, bro, you've been impressing me for real. Thanks, friend, for that. LMM mitigated this trade. Oh, that message disappeared. Yeah, yeah, awesome. Us too. His new monster truck game came with this green squishy car. And we run it over, he loves it. Almost there. I go live Tuesdays, Fridays, and Sundays. If you want to wait for, I don't want to show that here. You know, there's going to be a discount coming up for Black Friday, but I don't like doing that. That wasn't the point of this. It makes so much sense, but at the same time, it's like I got to go over it a couple times to truly understand. Of course, absolutely, you do. Of course, you do. Who's going to get it their first time? you know, and that's why all of my students are practicing on a demo account. If you're practicing with live money, I'm telling you right now, if you don't have a skill, a model, something you trust, and you're just trading live money and guessing, that's not going to get you anywhere. And I'll take it one step further and say you are stunting your progress as a professional trader by not using a demo account first. And I can tell you that firsthand from being, a coming up trader and an educator myself. All the guys that are using demo accounts are killing it. And then when they go into their live accounts, there's so much confidence in their abilities that they don't care. That's the difference between a losing trader and a good trader. You both can do technical analysis, but the difference between a profitable trader and a losing trader is the fact that they don't care. As soon as you, and I coined this term, the Care Bear stare. As soon as you start caring, that's when everything goes out the window. You're like staring at the charts, doing the Care Bear stare. You can't care. If you are in the trade, then you're supposed to be committed to that. Why would you care if you're committed, if you trust your model? If you're squirming in a trade, you need more time in demo. Friend, what's your favorite time frame? Snipe money printer. 1 minute. 1 minute time frame. It's all I need for the money printer. Tried guessing on a trade yesterday with live money, lost 19. Practice, 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 practice. You are learning the most high form of financial education there is for you to free yourself. Okay. PhD level stuff. And technical analysis is easy. It's yourself that you're battling. Every single level that you get to in this game, the boss is always going to be a more meaner, bigger version of yourself. So I'm going to move this guy right there and call that a win. God bless you guys. Have a great rest of your weekend, and I will see lots of you tomorrow. Thank you so much for joining. I hope you found this informative, and I'll have this video up for you guys right away. Thank you.